Your competitors processed 15 billion transactions last quarter, while your core banking system was down for maintenance. Twice, digital-first banks are moving at light speed, and legacy infrastructure isn't just slowing you down anymore, it's bleeding you dry. How much is waiting costing you? By the end of this video, you'll understand exactly why banks waste $12 million on failed modernization projects. And more importantly, how to make sure you're not next. We're going to show you the hidden costs your vendor isn't mentioning, the integration traps that derail even well-funded transformations, and the specific breaking points where legacy systems turn from assets into liabilities. This is episode 2 of our 5-part series on core banking modernization. And today we're talking about the real cost of getting it wrong. I'm here with Marcus Chen, Advanedge's AI business strategist, and Robert Caldwell, a banking executive who's navigating this exact challenge right now. The gap between traditional banking infrastructure and digital-first competitors isn't just widening. It's becoming a chasm that swallows market share, talent, and customer trust. And here's what most institutions don't realize until it's too late. The biggest cost isn't the technology. It's everything that happens when you choose the wrong transformation partner or follow the wrong implementation roadmap. Let's talk about what banks are actually missing. We recently worked with a regional institution that thought they understood their modernization costs. They budgeted $8 million for a core conversion. Sounds reasonable, right? The vendor D them $6.5 million for software and services. But 18 months later, they'd spent $14 million. And they still weren't live. Where did the extra $6 million go? Integration gaps, data migration failures, regulatory compliance updates that weren't scoped in the original contract, staff training that took 3 times longer than projected. And here's the kicker. None of this was hidden. It was all predictable. They just didn't know the right questions to ask. Another institution we advised had a different problem. They chose the cheapest bid from a mid-tier systems integrator, saved $2 million up front, lost $4 million in extended timelines, failed integrations with their digital banking platform, and emergency consulting fees when nothing worked the way it was supposed to. The pattern we see across the industry is consistent. Banks optimize for the wrong metrics. They focus on software licensing costs and miss the operational expenses. They negotiate vendor fees down and end up paying more in the long run because the implementation wasn't done right the first time. Robert's been through this. He knows that feeling when you're 6 months into a project and you realize the roadmap you were sold doesn't match the reality you're living. And Marcus has seen the data from dozens of these transformations. The institutions that succeed aren't the ones who spend the least. They're the ones who understand the total cost of ownership from day one. So let's break down where the real money goes. The big 3 core providers, Fiserv, Jack Henry, and FIS. They power roughly 70% of U.S. banks. Their platforms are robust, proven, and incredibly complex. When you modernize with any of these providers, you're not just swapping out software. You're rebuilding the central nervous system of your entire institution. And that touches everything. Your loan systems, your digital channels, your compliance reporting, your customer data, your payment rails. This is where the $12 million mistake happens. Banks underestimate integration complexity. They think about the core platform in isolation, but modern banking doesn't work that way anymore. Your customers expect seamless experiences across mobile, online, and branch. Your lending teams need systems that talk to each other in real time. Take loan origination, for example. A platform like Abrigo, which is a best-in-class loan origination system, not a core provider, can accelerate your lending workflows and help you compete in modern credit markets, but only if it integrates properly with your core system. We've seen institutions implement Abrigo and cut loan processing time by 40% because they built the integrations right. Fast, smart lending decisions become a competitive advantage when your systems work together. But we've also seen the opposite. Banks that treat integration as an afterthought. They modernize the core, then realize their LOS can't communicate with it efficiently. Suddenly, loan officers are doing manual workarounds. Data integrity suffers. Compliance reporting becomes a nightmare. And the customer experience, the whole reason you modernized in the first place, actually gets worse. Here's what Marcus tracks on his analytics dashboard. Time to first value. For successful core modernizations, institutions should see Operational improvements within 9 to 12 months. If you're 18 months in and still fighting fires, something went wrong in the planning phase. Total cost of ownership over 5 years. The software licensing fee is maybe 30% of your real cost. The rest is integration, training, maintenance, and opportunity cost from systems that don't work together. Then there's the hidden cost nobody talks about. Institutional knowledge loss. Your legacy system, as outdated as it might be, contains decades of business logic, custom workflows and compliance rules that someone coded in there for a reason. When you modernize, you need to capture that knowledge, translate it, and rebuild it in the new environment. Rush this process, and you'll spend years rediscovering why certain rules existed in the first place. The institutions we work with that get this right follow a different playbook. They start with a total cost analysis that includes integration mapping across every system that touches the core, digital payments platforms, treasury management, risk analytics, loan origination, mobile banking. They budget for data migration as if it's the most complex part of the project, because it usually is. And they build regulatory compliance into every phase, not as a final checklist item. They also choose implementation partners based on proven transformation patterns, not just on price. We help clients navigate this by bringing Fintech expertise that bridges traditional banking and modern technology. When a bank is evaluating Fiserv DNA versus Jack Henry, Scimitar versus FIS IBS, the decision isn't just about features. It's about which platform aligns with your digital strategy, your customer base, your growth plans, and your existing technology ecosystem. Here's what practical implementation looks like right now. First, you map your current state with brutal honesty. Every integration point, every manual process, every compliance requirement. Then you build a transformation roadmap that phases the work in manageable pieces. Core platform first. Yes, but with API layers designed from day one to connect with everything else. Digital payment integration comes next, because that's where customer experience lives. System integration across lending, deposits, and treasury happens in parallel, not sequentially. Throughout this process, Advanedge helps institutions navigate the regulatory maze. Because here's another hidden cost. Compliance failures. During transformation, we've seen banks trigger regulatory scrutiny because their data governance fell apart mid-migration. The cost of fixing that isn't just financial. It's reputational, operational, and strategic. The institutions that win this game treat modernization as business transformation, not IT projects. They involve lines of business from day one. They train staff continuously, not just at go live. They build feedback loops so they can course correct before small problems become $12 million mistakes. And they recognize that the cheapest vendor often becomes the most expensive implementation. Robert's learning that the hard way. But he's also seeing that when you get the strategy right, when you choose partners who understand both traditional banking and fintech innovation, modernization becomes a competitive weapon instead of a budget nightmare. The banks pulling ahead right now aren't necessarily the biggest or the best funded. They're the ones who understood total cost of ownership, built integration strategies that actually work, and executed transformation with experienced partners who've seen these patterns before. The future belongs to institutions that adapt, but adaptation without strategy is just expensive chaos. The $12 million mistake isn't spending too much on modernization. It's spending anything without understanding what you're really buying. Choose your partners carefully. Map your integrations completely. Budget for reality, not vendor optimism. And remember, your legacy system got you here, but it won't get you where you need to go next. The cost of waiting is higher than you think. The next video proves it.